Welcome everybody, Trading Nevesh here. Today we're going to go over my 90% accuracy daily bias using fair value gaps and liquidity on the 4-hour time frame. Okay, so we're going to try and find 10 good examples so you guys can see the thought process of how we actually look for the direction to take the trades in, right? Because this is the staple, the foundation to how you trade. Okay, this is the easiest part. So you really need to nail it, and then you can avoid the string of losses, or at least minimize them. I'm not saying we don't lose. I still take losses. It's only the accuracy that has 90%. So starting off, we're on London session right now. The first thing we do need to do is go to the 4-hour time frame. Now, to bear in mind, sometimes price is just going to be in a continuation model. I look for reversal trades. So in this instance, I can see that price has taken the high, so I'd be looking to sell. If we take the high, we look to sell. If we take the low, we look to buy. Okay, so you mark out the previous 4 hours high and low. If we have swept the high and low, you're going to go for the most recent sweep. Okay, now the next stage is to analyze the closest bullish and bearish PD arrays. For this, we're going to use fair value gaps and liquidity. So in this instance, if we look to the left, we are currently inside this bearish gap. And we've also inversed this bearish gap here. So that's the closest bullish PD array. And we are inside a bearish PD array. So what are we looking for? We're looking to take selling positions. Now, this can be for a multitude of factors. That's down to you, how you enter the market. It could be inversions, displacements through FEGs and breaker blocks. Doesn't really matter. Let's just press play on price. See, we're displacing through these levels. Do we get the short? And it looks like we at least do. So this is one successful example. You see that price has swept the high previously here. We swept the high. We then had multiple opportunities to look to take shorts. Now, this doesn't have to last forever, right? The directional bias just needs to provide us a bounce, and then we can make our money and go along our day. So now we're consolidating. That is one good success. Let's go to the next macro. This was London macro. We're now going to the AM macro. So doing the same principle, we're now in a new 4-hour candle. We see we swept the low inside a inversion fair value gap. That's bullish. So we're looking to take buying positions right now. We also have the swing high resting above here. And we're inside, or we at least have a gap. We can see that price is pushed up and then pushed back down. So we're going to go with the most recent, and we're going to look to take buying positions. Obviously, this looks like we've got AMD, accumulation, manipulation, and distribution. Nice. So we've got another example of the directional bias playing out. We swept the low. We also reacted off a bullish fair value gap, and the direction has provided us a win. So let's go to the next day. That's 2 for 2. Try and find 8 more examples to really understand how I approach the market. Okay, it's super simple, quantifiable, mechanical. Only discretion will be in your actual entries. So now we have a low that's being swept alongside a high. We're also in a bullish 4-hour fair value gap. Now we're going to look for the closest bearish gap, which we don't have a bearish fair value gap, but we've got a bearish inversion. See, we displaced through a previous 4-hour gap. This is now ready. We can look to take buys. So it doesn't have to be instant, but we're in the macro now. Even if we go down first, it looks like we did at least push up. You could see you had an entry off the mitigation. Maybe you enter off a break above structure. Doesn't really matter how you approach it. The point is, the directional bias tends to be not always correct, but more often than not, it at least allows us to understand where we want to go. Okay, so in this scenario, we had plenty of buying opportunities. Oh, that's on the 1 minute, on the 3 minute, sorry. So we could see here, even on the 1 minute, we actually had opportunities to make money multiple times. So that's 3 for 3. Let's go to the next session. So now we're in the 950 to 1010 macro, the first AM macro, and then we have the seconds. They're the only sessions I really trade alongside London. We use the 4-hour high, also mark out the 4-hour low. We're inside a bullish 4-hour gap. We have displaced through this inversion here, so that's the closest bearish strength or area of struggle if we do take buys. So let's go on the 1-minute time frame now. You'd just be looking for displacements above structure, something like this. And we could have at least made money here. See, we displaced through the structure. We then return back to a bullish fair value gap. And at least push high, taking this high and this high. This is another success, right? We don't need all the moves. We just need a bounce and to understand which way we want to bounce. So that's another success. 4 for 4. Let's go to the next day. Super quantifiable. If you guys want more videos like this, then let me know because we will go over it in detail. I'm really going to go hard this year so you guys can advance, okay? So right now we've inversed the inverse, so we can delete this. We have the 4-hour high that has been swept. I do find London tends to continue. So instead of reversing, because we sweep the high, it does like to continue. But we are still correct more often than not. Maybe we have a lower accuracy, but it's still correct. Now I'm checking here because we did have a bearish gap, but it does look like we did inverse it. Only just. Okay, no. This is not an inversion, so this is a valid PDRA to the sell sides. So we are looking for selling pressure now. Okay, we displace through the low. Depending on how you enter, you have your mitigation on this down close candle here. We drop nicely. So more than enough, again, for you guys to make some money on the way down. We're not trying to predict the whole bearish move for the whole day. We don't care about that. We are on the 1-minute time frame. We just need enough money to actually make something in the day. I'm happy even with a 0.5 off for the day. And then if I can hit the rest of my break even, I move on and back tomorrow. Very simple. I'm pretty sure that was the 5th example now. Now we're going to do the same thing again. Literally, rinse and repeat. So now we swept the high. We also have the low. So we're above a PDRA right now, but we're still looking to take sells. Okay, so we see price does displace to the downside. It all depends on how you like to take your positions. We can see that you did at least move down for a short period of time. So this will be dependent on how you trade, but it's still bearish. We now inversed very nicely to the downsides. Fantastic. And that's 6 for 6. Honestly, I truly love trading. So now let's go to the next day. Obviously, you only love trading when you're winning, though. See, even when I was struggling, I've always loved it. Okay, so we swept the low here. We also have a high that's intact. We are in a bullish gap. I'm only interested right now in looking to buy. See what the market does. Okay, we displace. Probably took a loss here. Okay, so it looks like one of these days we're in a continuation. It doesn't really matter. Inside my macro, I would have took a loss, but then eventually price is still bullish. So a directional bias is flawless. It just depends on your entry, right? Not every time price will go up instantly, but a good rule of thumb is that you are bullish. So that's 7 for 7. I'm counting that still. Okay, so we've got a high that has been swept. I'm bearish. We have no bearish gap. But I'm still bearish. We swept the high. Okay, so that provided summit. We displace through this candle. Rest would be getting stopped out, at least at break even. So that's another, I'll class that as another W. Even days like this, when we are a continuation model, there's more than enough opportunities to look for that short example. So we're pretty flawless right now. Then we do drop further. Right, it's going to do 2 more examples, and that'll be it for this. Actually, we'll do a few more. So right now, what are we looking for? We have the 4-hour candle has been taken. We're inside a bearish gap. We just want to sell. Don't even need to look. Okay, so where would I sell in this instance? For one, we're accumulating. I'd probably take a short here. So I would take a lot. Oh, no. We're accumulating, so I would leave this alone. Okay, we'll class this as a loss. Just because our session, but it still drops anyway. So is it a loss or is it just in your macro? I think this is really good for you guys to understand that your directional bias can be flawless, just the timing's wrong. Depends on how you enter. So we're going to go to the next one. We'll class that one as a loss. What are we looking for now? So we need to mark the high and the low. We're inside a bearish gap. We'll check at 10 o'clock to see if this does inverse. Okay, so you'd be bullish now because you just inversed. We inversed this bearish gap, but then we've swept the high. So this will be one of them days where you kind of like 50-50. If it's A+, you look to take continuation models. If it's not, you just kind of sit in your hands. Okay, so we will count this one as a loss as well. So it's around 80% accuracy. You can see even in my second AM macro, I get a win. So I can't even count this as a fucking loss, right? We got this fair value gap here. Just overlaps with the breaker. A+ entry or mitigation in this instance. But that is it. Pretty flawless. We'll say it's an 80% accuracy or 90%. Not too sure. I just know every way that we did say it does go that way. So we could even class as 100%. So that is it. Make sure you do follow this channel. I'm going to be posting a lot more in detail, mechanical stuff you can actually follow. And your entries, you can use your discretion. So that is it. Trading Nevish, I am done.